Ladies and gentlemen, buckle up, because today on Boss Economics World, we're diving headfirst into the swirling vortex of economic mismanagement, government meddling, and central bank tightrope walking that's threatening to tank Russia's economy faster than you can say, record high interest rates. Yes, folks, we're talking about the latest drama starring Russia's central bank governor, Elvira Nabiullina, a woman once hailed as the savior of Russia's post-Ukraine invasion economy, but now under fire for her stubborn refusal to slash borrowing costs that are choking businesses like a boa constrictor on a bad day. And, as always, we're here to satirize the economic problems, criticize the government's mismanagement, and expose how their policies are driving Russia straight into the jaws of a serious recession. Let's get into it, shall we? Here's the deal, folks, Russia's economy is teetering on the edge of a cliff, and the government is basically yelling at Nabiullina, "Hey, Elvira, why don't you just push it off already?" The Bank of Russia has kept interest rates at a jaw-dropping 21% since October 2024, in a desperate bid to tame inflation that's been running wild like a pack of rabid wolves. Inflation hit over 10% late last year, more than double the central bank's target of 4%. And while recent data shows seasonally adjusted annualized inflation cooling to 6.2% in April 2025, down from 10.7% in January 2025, according to the central bank's May 27 report, the government is getting antsy. They want Nabiullina to slash rates at the next meeting on June 6, 2025, because, surprise, surprise, high borrowing costs are strangling businesses, halting investments, and threatening to plunge the economy into a recession. Now, let's be clear, Nabiullina isn't wrong to worry about inflation. Runaway price increases can devastate an economy, eroding purchasing power and stability. But here's the kicker, the government's own policies are the root cause of this economic mess, and now they're trying to pin the blame on the central bank. Classic move, folks. This is like setting your house on fire and then yelling at the fire department for not putting it out fast enough. So, let's break this down, layer by layer, from the surface-level drama to the deep, systemic issues, and, of course, sprinkle in some scorching satire and the latest data to keep you informed and entertained. First, let's talk about the soap opera playing out in Moscow. The Kremlin is reportedly pressuring Nabiullina to cut rates, with anonymous officials whispering to the press that the current 21% benchmark rate is wreaking havoc on the budget and civilian industries. Even Finance Minister Anton Siluanov, who back in November 2024 was all like, "Oh, Elvira, you're so right to prioritize inflation," has now flipped the script. On May 19, 2025, he told reporters, via Interfax, "I believe the central bank has significant room to maneuver on monetary policy." Translation, Elvira, cut the damn rates already. Economy Minister Maxim Reshetnikov and First Deputy Prime Minister Denis Manturov have piled on, warning that the economy could cool down too much if the central bank doesn't act. Oh, the drama. But here's the satire moment, folks, isn't it rich, I tell you, that the same government that's been pouring money into a war machine, driving up inflation, and watching oil and gas revenues tank, is now pointing fingers at Nabiullina. It's like a kid who spills juice all over the floor and then blames the mop for not cleaning it up fast enough. The hypocrisy is so thick, you could cut it with a butter knife and serve it on toast. Now, let's zoom out and look at the economic dilemma Nabiullina faces. The central bank is stuck between a rock and a hard place: keep rates high to fight inflation, and risk tipping the economy into a recession, or cut rates to stimulate growth, and risk inflation spiraling out of control. Olga Belenkaya, an economist at Finam in Moscow, summed it up perfectly: the challenge for the central bank now lies in choosing between two risks. And, folks, this is where the government's mismanagement comes into play, because they've created a situation where there are no good options, only bad and worse. Let's look at the data. The central bank's tight monetary policy has cooled inflation somewhat. Seasonally adjusted annualized inflation dropped from 10.7% in January 2025 to 6.2% in April 2025. But here's the catch, this decline is largely driven by a stronger ruble, not by any structural improvement in the economy. And as the central bank itself admits, this trend could be volatile. Meanwhile, the high interest rates are crushing businesses, especially those outside the military-industrial complex. Take Severstal PJSC, a major steel producer, as a prime example. In Q1 2025, Severstal reported a negative cash flow of 33 billion rubles, $421 million, compared to a positive cash flow of 33 billion rubles a year ago. Why? Because hefty borrowing costs have weighed on customers and delayed their projects, according to a company spokeswoman. Severstal has been forced to dip into its cash reserves just to keep the lights on, and they're begging the central bank to cut rates to at least 15% to survive. And Severstal isn't alone. Dozens of major Russian companies have scrapped dividend payments for 2024, signaling serious financial distress. According to an April 2025 report by the Moscow-based Center for Macroeconomic Analysis and Short-Term Forecasting, production of civilian goods fell 0.8% per month in Q1 2025, hitting its lowest level since April 2023. Recession warning lights are flashing, folks, and the central bank's response. A tepid recommendation in May 2025 for lenders to offer loan restructuring to struggling corporate borrowers. Oh, great, a band-aid for a gunshot wound. Classic central bank move, do just enough to look like you're helping, but not enough to actually fix the problem. Now, let's dig deeper into the real culprit here, the Russian government's economic mismanagement. While Nabiullina is playing a high-stakes game of whack-a-mole with inflation, the government is out here pouring gasoline on the fire. First, let's talk about war spending. Russia's economy is being propped up almost entirely by government spending on the military, with civilian sectors left to wither on the vine. According to the Stockholm International Peace Research Institute, SIPRI, Russia's military expenditure soared to $109 billion in 2024, a 24% increase from 2023, making it the third largest military spender globally. This war machine is sucking up resources, driving up demand, and fueling inflation, yet the government has the audacity to blame Nabiullina for the fallout. And it gets worse. Russia's fiscal situation is deteriorating fast, thanks to declining oil and gas revenues. With global crude oil prices dropping, Brent crude is hovering around $70 per barrel as of May 2025, down from $85 a year ago, per OPEC data, and a stronger ruble eating into export earnings, the government has had to revise its budget forecast. The fiscal deficit target for 2025 has been more than tripled, signaling serious strain. Yet, instead of cutting back on war spending or implementing structural reforms, the government is leaning on the central bank to paper over the cracks with lower interest rates. It's economic malpractice, folks, and the ordinary Russians, along with businesses like Severstal, are paying the price. Zoom out even further, and you'll see that Russia's economic woes are compounded by its growing isolation on the global stage. Sanctions imposed by the West following the Ukraine invasion have crippled Russia's ability to access international capital markets, technology, and trade networks. According to the World Bank's June 2025 Global Economic Prospects Report, Russia's GDP growth is projected to slow to just 0.5% in 2025, down from 2.9% in 2023, as the effects of sanctions and high interest rates take their toll. Meanwhile, global competitors like China and India are snapping up discounted Russian oil, but even that lifeline is weakening as OPEC Plus production cuts fail to prop up oil prices. Here's the satire moment, folks. Remember when the government said sanctions would make Russia stronger by forcing it to become self-sufficient? Yeah, how's that working out? Turns out, isolating yourself from the global economy while pouring billions into a war doesn't exactly set you up for economic success. Who could have seen that coming? Oh, wait, everyone. So, here's the boss economics world hot take, folks. Russia's looming recession isn't Nabiullina's fault, it's the government's. The central bank is stuck cleaning up a mess created by runaway war spending, fiscal irresponsibility, and a failure to address structural economic weaknesses. Slashing interest rates might provide short-term relief for businesses, but it risks unleashing a new wave of inflation that could devastate ordinary Russians. On the other hand, keeping rates high could indeed tip the economy into a recession, but that's a recession the government's policies have already made inevitable. For our viewers, whether you're an ordinary citizen worried about your financial future or a finance pro trying to navigate this chaos, here's the takeaway: Russia's economic problems are systemic, not cyclical. The government needs to stop treating the central bank like a magic wand and start addressing the root causes of this crisis: excessive military spending, declining export revenues, and a lack of diversification in the economy. Until that happens, no amount of interest rate tinkering will save Russia from the economic abyss. And finally, a message to the Kremlin, boss economics world style: hey, guys, if you're looking for someone to blame for this economic dumpster fire, try looking in the mirror. Elvira Nabiullina isn't your scapegoat, she's just the unlucky soul trying to keep your sinking ship afloat. Maybe, just maybe, it's time to stop pouring billions into tanks and start investing in the civilian economy. But hey, what do I know? I'm just a humble economics commentator, here to call out absurdity and cheer for the little guy. Until next time, folks, stay savvy, stay skeptical, and remember, the real boss is the truth. Peace out.